What is happening, best ever listeners? This is Matt Faircloth, and welcome to the best ever CRE show and my segment called, you know it, Next Level CRE. Thank you for joining me, by the way. If I don't say thank you enough, I'm grateful you guys are spending your time listening to me today. And I'm grateful you guys are enjoying this episode because this is a really, really good one coming at you guys today. And the guest today and I are both going to be at Best Ever Con, which is going to be next February, upcoming February. And guess what? It's right after President's Day weekend. So if you are like me and are an avid skier, why not come and enjoy President's Day weekend? Skiing with yourself, skiing with some friends, skiing with some business colleagues, skiing with your family, whoever you're going to ski or snowboard with. That's okay. I won't judge you if you snowboard. You can do that all in Salt Lake City. And then come join me and our guest today and many, many others talking real estate shop about bringing your business to the next level at Best Ever Con. It's the 10th best ever. It's going to be X best ever, BEC 10, BEC X. It's going to be amazing. And if you guys want a discounted ticket, I got it for you, right? Go to besteverconference.com. Your coupon code, my friend, to use is podcast10, all capital letters, podcast10. Use that coupon code, and guess what? That gets you 10% off. A lot of money. There you go. That's yours. You're welcome. Use that to come see me and our guest today at Best Ever Con, along with many, many industry leaders and others. There's going to be investors there. There's going to be people that you guys know in the room, and people you don't know that you ought to know are going to be in the room too. So come on out to Best Ever Con and let's have some fun together and learn about growing each other's businesses and getting everything to the next level. Okay? Now, today's guest is awesome. I've known this guy for years. We both invest in the same markets. And I want you guys to listen today about like the analysis brain that it takes to make deals work. We're going to talk about like gutting an apartment building literally down to the studs and putting it back together again, doing huge value adds. But also we're going to talk about the philosophy and strategies that it takes for choosing markets. Sorry, those that are investing in Austin, because we kind of slam Austin a little bit for fun, but Austin's also an amazing market. So we mentioned that too on what's good and what's something to be careful about there. We also unpack at the end there the idea of investing in assisted living. So those of you guys that are curious about what all this silver tsunami thing is all about, that is all chock full in this episode. This is lots and lots of really great stuff here. So let's hop in and bring my good friend Todd Dexheimer into the studio. Best ever listeners, let's welcome a good friend of mine, Todd Dexheimer, onto the show. I've known Todd for years, and we've hung out at Best Ever conferences, and I think done a little bit of skiing together and stuff like that at some GoBundance events together, Todd, and stuff like that. So and we also are fellow landlords in similar towns and we talked a little bit of shop offline. We should have had the microphones on. We were talking a little bit of market shop and everything like that, but that's okay. Todd, welcome to the Best Ever CRE show.
Matt, appreciate you having me on. Definitely.
Yeah, you are. Well, no problem. I will thank me after. I'll let you know. Right. Let's see. Let's talk landlording, man. You and I were talking market selection and stuff like that. Offline, we got into talking about a market that I'm looking at out in Minnesota by you, in buying a deal. Right. Yeah. And like, okay, that's a good cash flow market, right? Like when you look at markets to invest in for multifamily, do you look at appreciation versus cash flow? Are those metrics when you're looking at deals? And if not, what else do you like? What are some of your yeses and nos from market selection? Because I know that you're in a few different markets.
Yeah. So for me, first of all, it depends a little bit on where that market's located and what our footprint is in that market. So for instance, I'm located in the Twin Cities, Minnesota, Minneapolis, St. Paul area. Would I purchase an asset in the Twin Cities knowing that the market isn't necessarily growing as much as I would like or has some of the indicators that I like? Potentially, depending on if I like, the city enough and all that kind of stuff. But if it's a nice B class, if it hits like the other metrics and I know it's in my own backyard and we can have some efficiencies, I would consider something like that, especially if it's got some other really good fundamentals that I can say, hey, this is the reason we're buying this asset, such as like maybe there's a massive value add opportunity there, or better yet, it's just got like killer cash flow. But for the most part, Matt, what I'm looking for is I want a market that has steady, job growth. It doesn't have to be like crazy, just like the leading the nation job growth, but good, steady job growth, good good population growth. I really like to look, the metric that I really like a lot is looking at the rent to income ratio, because I want to make sure that the rents currently are affordable for our residents and that we have room to grow those rents. So I like that metric a lot. And then I really want to find out how much people, like, how easy is it to get a building permit? How many permits are there right now? Obviously today, that's a big thing as we're looking at some of these south and southeast markets and even some mountain markets. You're seeing that they overbuilt. And, it's like, hey, their rents. I saw an article the other day and I didn't verify it, but I think Austin, Texas, rents declined since 2022 by like 21%.
I was going to throw some rocks at Austin, Texas, only because most people won't do that. So those that listen to me every week on this show know that maybe it's just because everybody's got to have a punching bag, right? So I like to throw some rocks at Austin because why not, right? Have you researched it? Is that one of those towns where it's really easy to get building permits? Because I've never heard that as a factor. It makes sense. I want to unpack it with you a little bit further, but is one of the numerous reasons why Austin experienced tremendous growth? Yeah.
And so, by the way, I'm speaking probably out of like true knowledge of the market.
Just go right ahead. It's okay. You and I are going to make it up. Make it up. Come on.
Rumors of what I've been told. It's really easy. I heard. Yeah. So I heard it's really easy to get permits in Texas. Like it's really easy to build in Texas. They're a lot less restrictive, and I guess really easy compared to what market, right? The Twin Cities is not crazy hard, but you still have to go through a lot of hoops and it takes a while and city approvals and all that kind of stuff. So what's the city going to do to stop somebody else from building a building right next to you that maybe shouldn't be built because the market doesn't need it? So I think that's what you got to look at. Like
they should make you jump through hoops and whatnot. I mean, it could take too long, Yeah. I just finished a job in Trenton, New Jersey. We built a 30 unit, right? It took years, Todd, like multiple, not like 18 months. I'm talking like, I was just searching through my email, like, I don't know, 4 years, 5 years, to get the building out of the ground, and then longer to get financing and all that, and yada yada yada, years and years and years and years. Shouldn't take that long, but there's also markets like I've heard Houston, Texas has no zoning. So if you decide you want to build a methadone clinic right next door to a church, right next door to an apartment building, right next door to a hotel, no problem, get right ahead and do it. That's probably the other side of the spectrum that shouldn't exist either. So. You like the idea of looking at the ease of building permits because that is a way to, if building permits are too easy, it could cause the market to grow and expand and get out of hand too fast.
Yeah. And obviously looking at the history of the market, and like anybody can look at the history of Texas and see that Texas has big up and down cycles, right? They just do. It's just history, and
everything's bigger in Texas, right?
Everything's bigger in Texas, and it's not just Texas.
The crashes are too. Yeah,
the crashes are too. But the ups are as well, right?
Yeah.
So, but at the same time, like I know some people that are investing in Cleveland, Ohio. It's not a market that I like, but I know people that do extremely well there because it's a cash flow market. So we love cash flow. So to answer your original question, we love cash flow. That's definitely something we look for. We are in cash flow markets in the Midwest. But we also like appreciation. So we are in markets that grow also in the Midwest. Now, they're not growing like wild. They're never going to crack the top, 2 or 3 or 4 or 5. However, rent growth right now in those markets are cracking the top, a couple. But as far as like just overall growth, they're never going to be like, wow, look at how sexy the Twin Cities is. Look at how amazing, these Midwest markets are.
Ooh, Minneapolis, St. Paul, man. Wow. Yeah. Oh, yeah. Let's do it.
But we see some population growth. We see some job growth. And that's kind of what I'm looking for. So we got both appreciation and cash flow. That's what we love.
Does rent, like if you were a Austin owner and rent earlier when it was shooting through the roof, when rents were growing in Austin 15, 20% a year, that kind of thing, would that does aggressive rent growth in a market concern you?
Yeah, very much so,
Yeah.
because you know
Right.
what's on the
That's
other
totally
side.
softball. Man, that's such a bad question.
That was
That's
a
such an
terrible
awful.
question.
Like, I'm a better interviewer than that, Todd. What the frick am I doing? Of course it
Come on.
does. Right.
It should. You know, but here's the
Why?
crazy thing.
Why
Here's
does aggressive rent growth a factor? Like that's a better question. Tell me why, Todd. Of course it does, right? But why is it? Because there's a best ever listener right now that's like, hey, this market, like this XYZ market, or maybe the market you're in right there is growing really fast in rents, and maybe they're not in yet. If you're in a market and it's growing fast in rent growth, hey, God bless you, ride the tiger. But that's not why you should get into a market, So maybe unpack it for me a little bit further as to why this is a concern for the best ever listener.
Well, so first of all, the reason why it wasn't a bad question is because there's a lot of people that saw Austin, Texas, saw the rent growth, and they were so excited about it, and they thought it was going to go on forever. They didn't think it was going to stop, and that's crazy. You're seeing these OMs
Everything
of people.
Is awesome.
Yeah.
Okay.
How many OMs did you see of like 5% rent growth annually, 7% rent growth?
They kept it going. They kept that party going forever, right? That's 5% or more. Like I saw OMs that were in the high single digits projecting rent growth for the next 5 years. Like, come on, man.
Because they're seeing the population grow. So they think it's going to just like the party's never going to end, but the party's going to end. And here's the thing is, here's what happens. We are in a capitalist society. So people vote with their wallet. And they decide when rent is affordable and not. And eventually they're like, hey, you know what? We're done paying this rent in this market. And it's not that simple, but basically that's how it is. And so that's what happens in Austin. And by the way, then you have this exuberance of all these builders because they're like, oh, look at the rent growth. Oh, everybody come in. And so now you got too many apartments. Yeah. And so it's just, it never works out. Rent has to stay relatively affordable. Now, can affordability suffer? Certainly, but if you have affordability that suffers like Austin did over a very short period of time, you're gonna have blowback. You're just going to. If you have affordability suffer over a 10, 20, 30 year period of time, and it slowly degrades, you're not going to see that whiplash like Austin did, but it just, it's going to go back to the mean. You have to.
Well, let me
that.
Defend Austin here, right? Is Austin a bad market to invest in?
No.
Like in general.
It's a great
Would
market.
you invest there?
Yes.
Great market. Why?
It's got everything you look for. It's got job growth. It's got population growth.
There you go.
It's got
the JOBs.
Right.
I think that the JOBs is what's causing this whole thing, right? That's that's what drives the whole freaking equation. And I think that like if there was a one thing in real estate investing, it would be jobs,
Yeah, for sure.
If I was only allowed to follow if I had to like blinders on and I wasn't allowed to know any other data, if you gave me a market with good job growth and I could hold for as long as possible there, I think I'd be okay.
Yeah.
Because
100%.
Job growth, it's tough to change that, unless unless you're like in a job growth along with job diversity.
That's what I was just going to jump in there to say. Yeah. It's got to have diversity. You don't want job growth in just one little sector. Like we were just talking offline. It's like, if it's only in travel, like if that's it, it's just no, that's not going to work. That
sucks.
Like that, or think about tourism. Detroit. Yeah. Tourism, right? So, think about Detroit. It's
go back further. Bethlehem, Pennsylvania, or Bethlehem Steel. A lot of the steel towns, the Rust Belt, right? It's rusty now. It didn't used to be rusty, but job growth is what makes Austin a sexy place to invest
for sure,
long term. Because eventually, I'll tell you what, Austin will absorb all that housing that got built. Maybe those developers are going to have to, eat a little bit of crow, let the greed go in, kick in. Maybe some buildings get taken back by the bank or whatever.
Well, and they already
work
have
its way out.
Yeah,
they have been, right.
Yeah,
and that'll all work its way through that pig will go through the python, and Austin will still be a great place.
Yes,
to invest. But to your point, markets that swing heavy up and then swing heavy back down are ones that you avoid.
I don't know.
Pause.
Maybe I'll be in Austin next. You never know. You just maybe convinced me to be in Austin.
Maybe I got you curious about it. Some best ever listener is going to bring you a deal in Austin because you just kind of like it. It's like one of those karma things, right? Like you and I over here knocking
Let's go.
right?
Let's go.
Yeah.
I think what you want to avoid is getting into Austin, Texas when it was 2019, 2020, 2021. Now it's easy in hindsight to say that, Matt. That's the easiest thing to say, right? But I think there's a lot of things leading you to believe like, hey, you know what? Maybe if I'm getting into Austin at this point in time in the cycle, I need to be really cautious about what I'm doing. I need to not assume quite so much. If you bought a building in 2020 in Austin and you bought it with long-term fixed rate debt and you counted on just like 2%, maybe 3% rent growth, an inflation type rent growth, you'd be doing fine. You wouldn't be jumping for joy.
Boring, Todd. Nobody does that.
Yeah, it's
nobody
boring.
does all that you just said. Yeah, I know. I wish people did. I wish more people would go in with like, hey, fixed rate debt that amortizes. And my underwriting says rent's going to grow by 2%, right? That's so boring. Geez, that might actually work, But unfortunately, because there's a lot of greed in our industry and a lot of trying to push the envelope and a lot of being the not second kid on the block, not 10th kid on the block, but like the 38th kid on the block that's getting involved in a rising market. And to make your deal work, you got to go in with high risk bridge debt and, rents are going to have to push and you're going to have to assume cap rates stay down and all the things, right? So it's, I don't know. It's an interesting world. So
by the way, I guarantee they said their underwriting was conservative.
Oh, sure.
And by the way, I'm not just picking on Austin, Texas.
Wouldn't it be so funny if somebody throws it out there like, hey, man, listen, this is crazy. If this deal works, we're all going to make a lot of money. It might not. This deal could completely fall apart. Wouldn't it be great if a syndicator was way more honest about it?
They probably, some of them probably should. Like, hey, this could be a great deal, but you might lose all your money. There's a good chance. Like, I kind of see what's happening here. We're getting overbuilt. But if things stay and we still have 6% rent growth, we're going to be doing great. So yeah. But it didn't happen just in Austin. It happened all over the country, right? Yeah.
What's that?
It happened all over the country, right? I mean, it didn't just happen in Austin. It happened we can start just naming markets. We could go on for a half an hour.
Oh, sure. It'd be fun. We just start throwing rocks at every market in the United States. Like, hey, right. So what brought you and I are both involved in Lexington, right?
Yeah.
What got you into Lexington originally? And that's Lexington, Kentucky, guys. I could unpack why, my company Doros is there, but tell me why your company decided to invest in Lexington originally.
So I was studying markets and what I liked about markets and a lot of the Midwest markets came up, a lot of the metrics that I already talked about. And I actually started buying in Cincinnati, Ohio, bought several buildings there, liked Cincinnati a lot. Yep. Louisville. And then I had a broker that reached out in Lexington. I don't remember how or why he reached out, but I went and visited Lexington. I'm like, I really like. Yeah, you know him.
A lot of the brokers in Lexington, we don't need to name them, but a lot of the brokers that sell in Lexington are based in Cincy because it's a way bigger market and it's about 45 minutes away. So
so he's like, hey, check out this market. Here's why I like it. This is a property you should take a look at. I didn't buy that property, but I did start a relationship with them. I bought a property fairly quickly from this broker and really liked the market because it hit this exact same metrics that I was looking for. It hit all the metrics, the things I like, the cash flow, the job growth, the rent growth, slow, steady. I like slow, steady markets. I'm boring. I'm a boring like real estate investor. I just like the slow, steady. I'm not a big, hey, this market could blow up. Lexington's never going to blow up. Like maybe, but doubtfully, like highly doubtful. It's just, we're just going to see.
No, right. Sir. No, right. I've been there for a while. I don't think as long as you have, but yeah, I don't see the equation of it blowing up. I see it growing.
It's just going to continue to grow.
What's weird about Lexington? Let me tell you what like probably thought was like a secret sauce about Lexington. Like there's this whole culture around horses there. Like, I mean, half the freaking apartment buildings are named after some kind of a like either a horse itself or a horse race, right? So anyway, there's a horse culture there, and the town just literally bleeds, equestrian, businesses and things like that. Because of that, this is a fun fact. The city's surrounded by like 400 horse farms, right? When you fly into the Lexington airport, like it's like this whole green, it's like a green ocean, and all of a sudden the city pops up out of nowhere, out of these horse pastures, and it's called the urban service boundary, right? That is what did I name right? Right. So that's what I liked about it.
Close
like the
enough.
city might as well be an island, like out in the middle of the Atlantic Ocean, because you can't build on any of those horse farms, because how dare you want to do that on my great grandpappy's,
You got it.
on his horse farm. They're all protected, and because that's such a major part of the city's economy and the city's culture and the city's history, those horse farms will remain there for another 1,000 years if the city has their way. So you can't build on them, and then they surround the city, so the city can get no physically larger. You can't sprawl, and all cities sprawl except for Lexington, Kentucky. Can't do it. If the city grows economically, and it's growing a little bit, it has to grow internally. It has to grow through density, which is good as a real estate investor. Your thoughts? That was the thing that I liked about it the most. It has some economic anomaly. For best ever listeners, when I look at markets, I look for some sort of an unfair advantage or a economic anomaly that makes the market unique and that makes it something that you can't replace anywhere else. And that right there is what makes Lexington as unique as it gets.
Yeah, that it's almost like you're an island there.
Yeah.
So it's like you're this island city. And yes, I agree. That was a big reason
Except
why.
for water, it's horses.
Except for water, it's horses. Yeah. It's green pastures and fences. And that was a big reason why I really liked Lexington, was because of that. Certainly one of the top reasons was because it was hard. And I mentioned that already. Like, it's hard. I like markets that are hard to build in. Lexington's really hard to build in. Like, you can't.
If you're building Class A, you can do it. And there's other guys building Class A.
A little bit.
Yeah. A little bit. Yeah. But like Class A, I mean, I just built an apartment building. The only reason the deal worked was because rents were well above $2 a square foot when you're done. Right. And best ever listeners, what that means is, like, if I've got 1,000 square foot apartment, if I multiply that by $2 per square foot, if it's 1,000 square foot, that means I should be getting $2,000. And 1,000 square foot is really generous for about a 2-bedroom. Like, that's about a 2-bedroom apartment ish, maybe almost a 3-bedroom these days. But that means you should be getting around 2,000 ish for a 2-bedroom, if not a little bit more. If you're not getting that, new construction is likely not going to work. And a lot of markets are not going to pay you $2,000 for a 2-bedroom. They're just not. Yeah, they just won't. So you're doing a big, like, this is kind of new construction-ish. I mean, I bet you probably had to do the dollars a square foot equation on it because of the amount of money you're putting in. You're doing like a big gut reno, right? Tell me all about that. Like, that's exciting. That's sexy. That's like tearing stuff apart and putting it back together. And it's probably easier than new construction, but also harder in some ways. So tell us all about the deal. What do you got?
So it's a fun project. So this is in the Twin Cities, beautiful locations right on the Mississippi River. Like, literally my residents can go out and walk down the property and go
for
to the river.
Go for a swim.
And we've got, we're going to put docks in there and boat slips.
Really? That's cool.
Rent those out. We've got some cool stuff we're putting along the river. We're actually doing the riverfront renovation right now.
Is it a floodplain?
Not the property. No, the bottom of the property. Yes. So the building is not, but like the bottom portion of the property is. So yes.
The land is.
The land, yeah. So some of the land will get flooded out, but the building is pretty high.
Yeah, but is that a big deal? Does your insurance carry your dinghy too hard on that? Because you're
zero.
Like, your big asset, your material asset's not in the floodplain. So if it's like a little bit of your land is, then that's not.
Yeah. And they don't care about the land.
Okay.
They don't. So yeah, we don't have to get flood insurance. Yeah. They don't care if your grass gets hurt.
Zero.
No.
Okay, good. All right.
Yeah.
So keep going. What was this, an apartment building, or was it something else?
So it's a 99 unit apartment building. It was a 99 unit apartment building. And this thing was, so dad bought it. He dies, passes it to his wife, who's got dementia. She has her kids take over. Her 2 daughters take over the property. Her daughters hate people. Okay. So this is great already, right? One of the daughters is living in one of the buildings.
And then they just inherited 99 of them, right? Yeah. Like, you hate people, and now you have to go deal with 99 of these people.
So this lady's living in this building. She's living there, and she
Oh,
vacates
wait.
all the.
The mom with dementia, God bless her, is living in the building.
No. The one of the daughters that's actually so
that
the
hates
daughters are
people.
that hates people. So they're taking care of the building. They're the managers of it.
Oh, no.
Like the actual
Just-
on-site leasing.
Just
people.
hating their life. Just hating their life.
Yeah. And they don't like people.
Right.
They don't want to deal with people.
Yeah.
They hide from like the tenants when the tenants have like repair requests. They literally hide from. I'm not making this up. This is crazy. And then so she vacates all the units. She vacates all the units around her because she doesn't like people. Yeah.
Wait. Say that again.
She vacated the units around her because she doesn't like people. So because people make noise, right? And so just vacate those
that's
units.
funny.
We bought this building.
That's great. I don't want to listen to you stomping around and your kids up above me or whatever. So I'm just gonna not rent that apartment out.
Exactly. Isn't that crazy?
That's great.
So
there's so many other professions in the world, go do something you love. Good God, get out of this. This is a mess.
Yeah.
Man.
Oh man.
Life's short.
Yeah. Maybe she should have been a teacher. No, just kidding.
No, God.
So
with no kids. All right.
65% occupied when we bought it. Because they couldn't.
How'd you find her? Was it open market with a broker? Like, how'd you find the deal?
So it actually was. A broker brought it to us and other groups, and it went under contract. Somebody put it under contract. They were way higher than we were, and it fell out of contract. And the broker came to us, and I think she said one other group, which who knows, but it came.
Were
to
you
us
second bid?
We weren't even close to second, but the broker knew we could close on it. Okay. So the broker wanted a sure thing, like, hey, we need somebody who can actually close on this. And when I walked through, I'm like, look, Mr. and Mrs. Broker, like, here's what's wrong with this building. Like, there's some structural things. There's some other things. Like, this is what's wrong with this building. So they knew, like, we knew what was going on. So we end up.
The dad didn't build it, right? Like the father of the managers that hate people. Yeah. He did not build this building. He bought it with structural defects, or maybe wasn't aware of the structural defects, and these things started to come up.
Yeah. So let me explain what happened. So there was it's one big complex, one big building. That's how things are in Minnesota usually. Okay. It's just one big building, not like multiple. So it's 99 units all together, and it's like an H shape. And then on the back side, there's another building that is a pool room, and above the pool room there was a kind of a lounge area and then a maintenance shop. And so this pool building was attached but built separately on a different foundation. So the pool building settled at a different different than the rest of the building. So the hallway is connected, and that's the only thing connected is the hallway there. So the hallway was sloping about 2 inches from one side of the hallway to the other. So really, it was actually a pretty simple fix. It's way simpler than what you would think. We got a structural engineer involved. Everything that we could tell, both buildings had already settled, and they weren't settling, like everything was done, right? And so
the damage was done.
The damage was done. Like when you look at the exterior and all that kind of stuff, it's like, okay, everything looks very sound. Everything looks good. When you're going interior and doing, doing the testing, it's like everything looks solid here. So all we had to do, and not all, I mean, this is significant, but we removed the floor between. We removed the hallway floor and then rebuilt that, reframed it and rebuilt it. And so that was all we had to do.
They didn't make you underpin the foundations? You didn't have to underpin the foundations to prevent?
Again, because they were already settled. Everything was fine there.
I thought that's where you were going to go. Because we've had to do that, man. You want to talk about
actually budgeted
some crazy
for that
stuff, man.
Yeah, we budgeted for that.
That's expensive.
Right. Which is one of the reasons why we got it for the price we got, is because we budgeted for.
Well, I mean, you need to budget for the worst case scenario, right? So what? You didn't have to underpin the foundations. What if you did?
What if we did?
I want to unpack a few things for the best of our listeners. I'm like half interview, half like teacher, right? For things I want to make sure people heard, right? Number one, Guys, Todd was not the high bid on the deal, but he still submitted an offer, and then that's how he got the deal. So best ever listeners, if you guys see deals you like, and even if you don't think your bid is going to be the best, submit the offer. And even if you think that the seller's not going to take your offer, submit the offer. If you think the broker is going to laugh at you, submit the offer. Because I can tell you, sometimes the number one bid can't get across the table, and the broker is going to have to say, oh no, I got to find somebody else. And if you got a good reputation with the broker, or at least they like the way you showed up, and you showed up professionally, you showed up, you can get it done, they will call you, right? So that's number one, submit the offer. Number two, whenever you're underwriting something and budgeting for CapEx, put in the worst case scenario of things that could happen, but also try and get it less. So Todd didn't have to underpin that foundation, which in my experience, Todd, was around 70 grand is what it costs to underpin the foundation under today's numbers for like a reasonable size building. And he didn't have to do that. So that saved him the CapEx and that he can spend that 70 somewhere else. Right. So now you've got this, you've fixed the pool house building tie-in, right? What else are you doing? Like, give me like the whole budget, dollars a door. What are you spending? Give me some of the financial metrics on where you're going to take rents and that kind of thing. Paint the whole picture for me on your business plan.
Yeah. So I'll hit on the submitting offers, by the way. We've almost never been the winning bid. It always comes back to us when it falls through. So that's 100%
second, third
true.
bid normally wins.
Here's one of the things I think is really important is that you do a lot of upfront work with the brokers so they can trust you.
Yeah.
Our brokers that we work with know that we are surety to close. They know we're likely not going to ever be the highest bid, but they know we will always close on a deal that we put under contract. So that's really important, is having them understand that. And we educate them of why our offer is what it is, right? It's super important to educate the broker why your offer is what it is. And we educated this broker why our offer was what it was. And so it just gains a lot of trust for you. All right. So on this deal, it's a fun
99
product.
units. Seller hates people. So my guess is seller probably didn't have very good maintenance support.
Disaster.
Was not listening to her tenants when they had work orders done. They needed work orders done. The whole hating people thing is not a good equation for property management. So I could just predict how all that spills out into the condition of the building when you bought it.
Yeah. So, I mean, green carpet, in the hallways, no lighting in the hallways. Units hadn't been touched.
Terrible. I could smell that building right now. Never been there.
You
I
can
probably
smell it.
I know what it smelled like.
Yeah. Gross.
Yeah.
Units hadn't been touched in 30, 40 years. So anyways, we gutted all the units, new cabinets, new flooring, everything.
With tenants. With the residents, sorry to cut you off. You went to the residents and said, "Hey guys, listen, I'm so sorry, but you just can't live here anymore because this property is just so nasty, not in good condition." Like, what did you? What was that conversation like? Was it just like you have 30 days to get out of here? Like, how did you vacate the building, or did you do it in rolling blocks?
Yeah. So great question. So we had 65% occupied. So we had a lot of units to start with. And then when we took over, we knew a few residents would move out just because anytime that happens, that's what happens. So we're, roughly 60% occupied right away. So we had a bunch of units to start. So we didn't give any tenants notice to move out. We let them stay and pay. We started renovating. We got a model unit done within 2 weeks of closing. We got that done and ready to go. And that way we were able to show the existing residents, this is a unit. All units will look like this. If you want to stay, you'll have to, you'll have to move into a renovated unit. We're going to move you out of your unit eventually. And people had leases, so you can't just move them out. And then this is the new rent. And so we had definitely many people say they don't want to stay, but we had about, I think it's 32 residents that ended up staying, and they pay the new rent at the new price. Yeah, it was really good. Now, we can't in Minnesota. Here's a downfall of Minnesota. You can't requalify a resident. So if they are living in your building and you raise rent significantly, you cannot requalify them.
What does that mean?
Meaning I can't run a background check. I can't ask for an income verification. So what
Yeah.
we do is we educate those residents. We say, here's what rent is going to be. Here's where our new residents qualify. This is the amount of a new resident qualifying. Here's why we want rent to be affordable for you. And so if your income, hits this amount, this is affordable for you. If it doesn't hit this amount, it's maybe going to stretch you a little bit. It's not as affordable, and you just want to consider that. We can't tell you one way or the other. You can make that decision for yourself, but just so you know, this is where rent is affordable. So you have that conversation with those people. Again, we can't tell them they can't in Minnesota. There was a big lawsuit that happened with this happened about 10 years ago. A guy did that. So anyways, so yeah, we got that model unit done, and then we just started renovating all the vacants. And tenants
what was your
moved
bump?
out.
Like, what was the existing rent versus the
roughly 500? Roughly 500.
So your increase. What was the total? The new rent was like, what number was the new rent?
Yeah, I think we're averaging different unit, right? So we're averaging like roughly 1650-ish.
Okay,
1650.
And so they were paying average 12 blended. A blended unit rent, and so you're going up to 1750. Great. What were you like? What's your turn breakdown to? Like, what are you doing, and what was it costing you?
Yeah. So interior, like I said, all new kitchens, flooring, tile the bathrooms, bathroom tile, shower, and
nice.
Paint, and a lot of wall work throughout, that type of stuff. All new light fixtures, all that. So interior wise, our unit renovations are costing us about $22,000 a door.
Okay.
Exterior and common space, we're spending another about $20 a door. So we're spending, it's total, well, not quite $20 a door. Total that we're spending is about $41,000 per door if you blend it between interior units, amenity spaces, all kinds of stuff. So let me tell you some amenities. This is where it's cool. So we had a ton of space, old maintenance shop, huge maintenance shop, gorgeous location right now. We turned that into a fitness center. We got a rock climbing wall. We got a full gym. We got a yoga. Huge. You can drop your gym membership.
Climbing wall.
Yeah.
I've never heard of rock climbing wall in an apartment complex.
Yep. Rock climbing wall. I saw it in an apartment complex. I'm like, that is cool. I'm putting that in one day.
Yeah.
And so
that's awesome.
When we bought this, I'm like, this is the place. We're putting in that rock climbing wall. You got the full gym experience. There's amazing. It's not an apartment gym. This is an amazing gym. You drop your gym membership.
Right. You don't need to go to.
You don't need to.
Yeah. And that's a real amenity, because it's like, hey, this is saving me money to live here. I don't have to pay $50 a month to the gym down the street. I can live here and run on Todd's treadmill, and you have free weights, or like a solo flex machines, that kind of all the stuff.
Yep. All of it. All of it.
Wow.
We ripped out a pool. We had a pool. It was leaking a ton. It was leaking like 2 inches a day. So we ripped that out, and we put pool stock. It's an indoor pool. We ripped it out. We got an indoor pickleball court. Yeah. Indoor pickleball court now.
Really?
Yeah.
That's
we got a sauna. We got a red light therapy. We got a cold plunge tub. We got a dog wash station. Dude, it's amazing. It's amazing. We got a floor. Awesome. The pickleball court is a pickleball court / floor hockey, because we're in Minnesota and you have to have hockey. We also have bubble hockey upstairs with some foosball and shuffleboard. We had another storage room. We turned into a co-work space with a podcast studio. Dude, it's amazing.
You changed your demographic. You've changed your demographic. Completely. Your demographic was a whole different avatar.
Different. We took in the back, we ripped off an old nasty deck and poured a stamped concrete patio, and then we got a smoker oven, we've got a charcoal grill, gas grill, big kind of sitting area, life-size chest.
Put a smoker in there.
A smoker.
I love it.
Yeah, heck yeah. We got
you have a cornhole, like gas fire pits.
Yep, big gas fire. Good. Yep, big gas fire pit out there. So it's a really nice patio. It did a lot of landscaping, cleaning up the riverfront area, and then the biggest thing my most fun project. One second. I got to say one more thing. My most fun project. I hate mansard roofs. This was a mansard roof on this thing. Yeah, wait, there's more. We ripped the mansard roof off because I hate mansards so bad, and we replaced the mansard. It looks so much better. We took the balconies and brought those up, so we got some height to them, and now we've got just everything's flat going up instead of that ugly mansard. If you don't know what a mansard roof, if you're listening to me, you're like, what the heck is a mansard roof? Just Google it. It's a stupid roof I don't know why they put it in.
They used to put on buildings in the 70s. Yeah. And it's like, okay, best ever listeners, think of like a really old McDonald's. Okay.
Yeah.
But like McDonald's before it used to, it was like, it's like, you know what it is? It's like the roof used to just sit on top and it was like an old mushroom. And then it got really hot one day and the roof just melted down the side of the building or something like that. And it's like the roof just drips down. It just continues down the side of the building and everything like that. It's the worst development idea ever. They're so ugly and they're somewhat expensive to take off and everything like that. So you just like bit the bullet and ripped it off of there.
We did. We said, we can't do this whole beautiful remodel and then have this ugly freaking outside. It just doesn't work. And so
we needed to. I mean, you have to take it off. I've seen people try and like, I've seen guys, okay, here's what I'm going to do. I'm going to change the shingles that are vertical, that are facing the road or whatever. I'm going to change those to a different tone to make it look like a two-tone roof or whatever. No, don't be cheap. Just take it off, right?
Just take it off.
The only way to do it is what you did, just to bite the bullet and rip the whole thing off and start over again. I got so many questions for you on all those amenities, right? Number one, what did all in the whole package, forgetting about the mansard roof, if you don't mind sharing, I've already asked you so many questions, like, hey, what does that cost you? Forgive me for being rude, but the best ever listeners need to know all this stuff with the cold plunge and a pickleball court and then the whack out bougie gym you got there. What did all that run?
Like just the amenity spaces or the whole
just
project?
The amenities.
The whole project's 4.1.
I already got 40 grand a door for you from you.
Yeah.
What was just the amenity pack with it, like the gym, the pickleball, just rough estimate?
I might
stamp concrete. You know.
Yeah, I think number in my head says about 250 for all of that stuff.
That's great. Okay. That's a good investment. Best ever listeners, think about that. Like, you guys are like, why would I spend $250,000? Right. We'll see. Some more questions. Does your on-site, like, is that a thing to maintain all that, right? Because then you got like a cold plunge station, and they got to make sure that the fire pit gets turned on and off, make sure somebody's not getting stupid with the smoker outside. We have things that are not like that at some of our properties, but there are things that on-site has to check on to make sure that they're not getting abused, make sure they're working properly, go clean them every here and again and everything like that. Your on-site, are they able to figure all that out, like especially like wacky stuff like cold plunge, that kind of thing? The on-site's able to handle all that.
Yeah, and so it's a 99 unit. So for one maintenance guy, they can handle it, but they're not going to be able to then do some of the things that sometimes you would. And a 99 unit, that's bigger than what one maintenance guy, smaller than what one maintenance guy can really handle. Maintenance guy can typically handle a little bit more than that. So then you usually give them stuff like, hey, you're going to do some of the sidewalk clearing, some of the, maybe the mowing, maybe, so you give them some other projects or you put them on another property. This will be one dedicated person to take care of all that stuff, and you can outside people.
And this is why, best ever listeners, if you guys are going to go buy a 10-unit building, you don't want to put a pickleball court into your 10-unit because
don't do that.
Todd's benefit is, and there's such an economy of scale above like 80 units where you can start having full-time staff and have them do things as part of a checklist, part of a task list that they do every day or every week or whatever it is. Hard to do on a 10-unit. Now, here's my big, like, bottom line question here. And I think I already know the answer to this just because this all just sounds so cool, right? One of the reasons here's why I threw rocks at pools a second ago, because the best ever listeners probably got their backup. Says, what? Matt and Todd said pools stink. I'll tell you, here's why I think pools suck. Now, you tell me if a pool is a good idea, bad idea, right? I think it sucks. Number one, because they're super expensive to maintain with all the chemicals. And I own multiple properties that have pools, right? All the chemicals to maintain them, all the pumps, God forbid your pool pump goes out or whatever. Well, there goes $5,000, right? Yo, yeah, to regulate. Man, funny. It's tangential, but it's funny. I toured a property in Virginia at one point, and we were thinking of buying it, right? And we go there to tour, and there's a pool. There's a freaking lifeguard sitting there at the pool in an apartment complex. And I'm like, oh My God. Oh my God. Some town inspector decided to throw the rocks and be a prick on this owner. And they're forcing this owner to pay $18 an hour to have this pool, to have a 16-year-old sit here, as a lifeguard. And of course there's nobody in the pool. And that's my main point, right? Going back to why I hate pools. They're expensive to maintain, and tenants think that they want them. They think that they will use them. Guess what? They don't. I've been to many apartment complexes, including stuff that I own and stuff that we visited and stuff that is owned by friends of mine. And I've rarely seen residents in the pool. They just don't, right? It's pain. I'm going to bring my stuff over or whatever. That's why I hate pools, because they're expensive and they are underused as an amenity. Would you agree before we move over to your building?
100%. And they're super expensive to fix if you have something like a leak in them. And by the way, to find a leak, they have a leak detection. Well, that's where the air comes out. And so they fix that area. They have to maybe dig up some of the concrete. They fix that.
Sure.
And then they put the detection on there again. And if the leak is further down, if there's another leak further down the line, then they fix that. And then they fix that, the next one, and the next one, and the next one, and the next one. And it could end up starting at 20 grand, all of a sudden costs you 60 grand to fix that pool, maybe 80 grand to fix that pool. And that's what we were looking at. We're like, forget it. We don't want this pool.
The tenants aren't going to use anyway.
Something they're not going to use. And here's the deal. Like, Matt, look, if nobody uses my pickleball court, that doesn't cost me any money to maintain. Like, I don't have to put chemicals on that. Yeah, we have to clean the floor every once in a while. Right?
Yeah.
It's
pickleball courts don't leak. There's no pump.
Yeah.
There's no, maybe you got to sweep it, but I'll tell you what, that's a lot cheaper than thousands and thousands a year, right? So here's the bottom line question. And I alluded to this already when I said why I hate pools, right? Do your tenants use these things?
Yeah. They
do.
Well, here's, let me.
Climbing wall, the smoker.
Probably not everything. A lot of it's just appeal, right? And so here's the smoker.
I'd be on the climbing wall. I'd be in the podcast studio. I'd be smoking Kiyabasi out there. I'd be on all the things. That sounds awesome.
We have an amenity. When people walk in, they are wowed. Like, I mean,
that's
when you're in the Twin Cities, when you fly in here the next time, come and visit. Like, you're just gonna be like, I want to give me an application, man. I want to move in, because you're just wowed. You're like, it never stops. Like, the amazement never stops. And that's what drives the people in here. We are already $50 above pro forma rents. So we bought this building, by the way, in March. We are about 90% finished with it. So we bought it in March of 2025. We've renovated all these units. We'll be 100% complete by December. We're already
but the jury's still out. You haven't had a full summer.
We haven't had a full year.
It's not fair for me to ask you yet for tenants to use the amenities, because you're not fully air quote stabilized yet, right? Like, you give
the amenities
it a year.
Just opened. Like, a lot of them just opened. Yeah.
Right.
So, but
right.
Here's where the proof, in my opinion, is we're $50 already over pro forma rents, and
there you go.
I'm almost, like, I can't be 100% certain because we're not there yet, but Minnesota has a very rigid leasing season, and so now is not leasing season. So we're not going to raise rents, but I am anticipating in the spring we will raise rents by at least another $100. And so we will be, if we can do that, we'll be at year 4 pro forma rents. And I found out
the hard way on why Minnesota has a very hard, rigid leasing season, because my company built a 36 unit up in Red Wing, a couple, 45 minutes away from you. And we finished the build in December. So we decided to put it up for rent in January, and I'm like, man, I'm such a dumbass, because it's cold. It's cold there, right? It was -10 when we had our first, leasing, right? That's just how construction runs, right? I mean, it's fun to have a plan, but all of a sudden, this time it overran, and that's how long it took the town inspector to get out there to give me a CO and all this other kind of stuff. So before you know it, I'm trying to rent in Minnesota in January. And I'm like, what a dumbass I am. Yep. Look at this. Now, we're fully rented now, but it took longer than I thought because of
you can't rent.
No, and who wants to go out in -10? I don't, right?
And think about trying to move all that stuff. Your hands are falling off trying to move.
Who's moving? Stuff. Right. I'm going to go carry heavy objects when it's -10 outside. Right.
Something to think about. Maybe you guys already have this, but
Yeah.
we put a blackout period in our leases for residents that they can't move. They can't move between November 1st and, February 28th. They cannot move. And if they do, it's a very significant fee. So if they move out during that time,
you want
to
make them pay rent all the way up until March 1st, whenever they move.
It's essentially what it is. Yep.
Yeah.
So yeah, it's really, really significant for them if they do break a lease during that time. Now, it's not nearly as significant at other times of the year because it's really easy.
In the time that we have left, I need to transition out. Like, I love that big reno. Congratulations to you on that.
It's been fun.
Not for the faint of heart. Real quick, I want to transition over to assisted living, but before we do that, for the best ever listener that's on this, that wants to go find themselves a 990 unit, they want to tear apart and put back together, what did you like? Every deal teaches me something, right? I've never stopped learning. I know you're a student of life as well, like I am, right? What did you learn from that deal that you'll convey to the next deals you do in your business?
So I think the biggest thing, and this has been a learning experience throughout the years, but the biggest thing when you're doing a big renovation, any renovation for that matter, but you have to have a ton of contingencies, reserves, whatever you want to call it. You have to over budget, because as much as you think you're over budgeting, things are going to happen, things are going to come up. Yep. And money's going to flow like a river all of a sudden. And you're going to, and so if you don't budget, you're going to be screwed. So the bigger it is, the more money you need to put aside. Just do it. I know it's painful to have that extra money. You can always distribute it back to your investors, give it back to your investors and go, hey, we didn't need this extra $1 million that we raised. Here it's back into your pockets. Like, that's better than saying, hey, investors, I need more money. I need $1 million more because I didn't.
Oh, by
budget
the way,
right.
guys. Yeah.
Right. And so, just over, I think that's huge. And then plan these projects, no matter how big or how small they are. But when you're doing a renovation, you need to make sure you do a lot of pre-planning and communicate really, really well with contractors and everybody on the property. Those are the two biggest things.
Love that. Love that. Best ever listeners, if you raise more than you need, you can always give it back to your investors later.
Yeah.
And it's better to have it and not need it. In the time we have left, Todd, I want to transition real quickly over to your journey into the assisted living space. When I first met you as a co-landlord in Lexington, sometimes to commiserate and cry on each other's shoulders and stuff like that about landlording in Lexington, and sometimes talk a little shop. You and I got to talking about other things we're up to, and you told me that you're up to assisted living, right?
Yeah. Yeah.
How did you get into that space? Why? How's it going? Tell us all about that.
Yeah. So I've really liked the space for a long period of time. When we know what's going on with the silver tsunami, by the way, it really hasn't hit. So some people think it's the silver tsunami has hit. It's not going to hit for another couple of years. The average age of my assisted living resident is about 82 years old. And the oldest baby boomers right now are about 78, 79, somewhere around there. So it really hasn't hit. Now, we definitely have baby boomers in our places, but it's not like the big hit. It will come. And I'm excited about that. But I had a guy I had done some business with before, and he kept on sending me this assisted living, wanted to partner with me. And I kind of blew him off for a while, but finally I looked at the numbers and I'm like, man, this really looks attractive. I've wanted to do this for a while. I actually sold the property not that long before that and had some cash sitting around. And so I decided to dive into it with really, honestly, Matt, probably just naive, honestly, just like not understanding the industry as much as I should have. I would not suggest anybody doing what I did. I didn't do the research. I didn't know. I probably, honestly, like, he's an awesome partner right now, but at the time he was the wrong partner. He didn't know enough about the industry either. He didn't have a background in the industry as much as you'd want. He was very green too. So I partnered with him thinking he was going to be the guy to be able to run it. And that was the agreement, but he was the wrong guy at the start. He's the right guy now. He's doing amazing.
So you were the equity. You wrote the check.
I was really the guy writing the check.
Did you syndicate, or did you just wrote the check yourself?
No, just me that wrote the check. I wrote the check for the first couple that we did,
and he was the ops, like the implementer. Yeah. Okay.
Yeah. Now we had a whole team in place. It was an assisted living operation that was already running, cash flowing really well, and so It went well. The first year, my investment was like 280 roughly, and the first year made like $210,000.
Wow.
Pretty good, right? Not
On a
bad.
recapitalization, on a refi, or is that just cash flow
just
coming
cash
off
flow.
the deal?
Just straight cash flow.
Oh yeah, all multifamily deals pay that, right? Yeah, you double your money in the first year in cash flow, right? Yeah, no problem, of course.
Yeah.
So
it's like,
is
okay.
that like was that a fluke, or is that just what these deals do?
So that's what I thought. I thought, let's go buy a bunch of more deals. This is amazing. So we did.
Yeah,
we bought
100% cash on cash. I'm in. Right.
Why wouldn't you, right? I'm in. My partner's amazing. Yeah. Everything's working so great. So went and bought some more deals.
I got the Midas touch. I'll just 10x it now. Right. Yeah.
Here's the problem with the next deals is they weren't operating like the first two. And so the next couple deals that we buy, one of them is distressed. It's like 50% occupied. It was being poorly run by some big, huge company. And then the other two are, so-so. But we thought we had a great team. Let's buy them and our team can implement and we'll do well. And so we bought those. And in the first year, I lost $500,000. And that hurt.
There you go. Now you're even again.
By the way, meanwhile, the other deal that I bought, instead of making 200 in the second year, made like 30 grand. The second year.
It's a fluke though. It's going to make 200 the next year, right? That's what you're telling yourself, right? Yeah, right? No problem.
It's going to keep going. And so I bought a couple more and those those were losing money. So there was one year where I fed the beast about $1 million, Matt.
Ugh.
It was
You
gross.
are not selling me, Todd.
No, I'm not selling you. Well, here's what I'm selling you on. I'll sell you in the end. Here's what it was. It's funny because sometimes intention really works. And so I'm wiring like $100,000 every month into these accounts to keep these things running. Finally, I called my business partner. I'm like, I'm out of money. I'm done. I've got $0 that I can, and I wasn't completely out of money. It wasn't really that, but I was.
You're out of what you're going to do.
I was getting close. And I said, I'm done. Like, I'm done. I've got no more money. I cannot send another wire into this company. So we have to either get this to work or we're closing the doors. And since that day, I've never sent another dime into the company. It just, the power of intention and things didn't turn on a dime, but things started turning. And things started working. And now the portfolio is making really good cash flow and the system is working. Now we've got kind of two portfolios. We got a Minnesota portfolio and a Wisconsin portfolio. The Minnesota portfolio is really working well. The Wisconsin portfolio, it's cash flowing, but not as good as what we want. We're getting it there. It's still a work in progress. We had third-party property management on that portfolio and we took over property management last year. So it's kind of been a slug trying to get through that. We're almost a year into it. We're cash flowing. We're doing decent. We'd like to see it better. We'd like to get, and we've got room for it. But yeah, I went from writing $1 million, into this and now we're making,
and now you're pulling something out.
Back. Yeah, a significant amount too. I mean, it's doing really, really well. So so let's talk why I still actually like assisted living.
Yeah.
First of all, the industry is not going anywhere. It's a fantastic industry. It is evolving though, and you need to make sure you evolve with the industry. But why I love it is that, look, it can make you a ton of great money and you're doing something really positive in as well. These are a lot of times vulnerable adults, like they're in their last anywhere between year and 10 years of their life. They need assistance. These are 24/7 care. These people need somebody to take care of them. And if you set the culture up the right way, you've got very loving people that are working for you, that are caring for these amazing people that, I mean, they've lived their whole lives working and, having families and all. And so we get to be a big part of the kind of the ending chapter in their life. And so if we do it right, now you can do it wrong and that's terrible, right? But you can do it right.
That's
and you
predatory. Because we've all heard of predatory assisted living
Yeah.
arrangements where it's like, let's provide the absolute bare minimum service and we'll send the absolute maximum of money we can to Medicare, Medicaid to drain that out and provide bare minimum service, right? So that's not what you're doing. Yeah.
Assisted living came about because of nursing homes doing exactly what you just said. And people
Yeah.
said, I don't want, mom or grandma or whoever into this nursing home. And so that's how assisted living was born, actually, is out of these nursing homes. And,
Mm.
and yeah, I mean, it's like our goal is to add life to the years of our residents. We're not trying to add years to the life of our residents. I mean, certainly we would love to, but we want to add life to them. So that's our goal.
Joy.
And that's what we, life. I mean, life, like what's life to you, right? That's what we want to add to these people and to our staff. So I think that's the best thing. You have to know how to manage these. And so that's what I would say to anybody listening. Like, look, don't jump into assisted living without having the right managing partner. And that you have to make sure you do a ton of due diligence on. Me partnering with Justin in the beginning, I don't regret it, by the way. Like, he's doing awesome. He's the right partner right now. But it caused us a lot of issues without him knowing the industry. What could I have done differently? Well, we could have either had a third partner that really knew the industry, or we could have had Justin understand and get to know the industry much, much better before we dove in and started buying, right? So one of those two things, but make sure you have the right partner in place. Now, there's another way to do it, is just to buy an assisted living building and then put a operator into that building, and then it's just a triple net lease. Now, you're not going to make, you could make good cash flow, but it's a triple net lease. That's it. You got to, it's like a commercial building.
There's the owner of the sticks and bricks, and then there's the operations partner that's doing the actual implementation and doing the interface with the residents and everything like that, right? In some ways, it's like a property management company and a building owner.
Yeah.
Right.
Yeah.
Okay. Do you own both of those?
Correct. We do.
Okay. Right. And some people don't, right? Some people own one, but not the other. And that, but you could just buy the sticks and bricks. But boil it down for me, for the best ever listeners. What is the components of making money in assisted living, and what are the components that get missed that could cause folks losing money in assisted living, right? Because you've now done both. You've made money with it. You've lost money with it, unfortunately. What causes both of those things for a best ever listener that wants to explore assisted living a bit further?
Your margins are thin on assisted living compared to multifamily. You know, when you buy a multifamily margin, you're looking for, let's call it 50%. That's just a good general rule. Doesn't mean every building's that way, but you're looking for about 50% margin, and that's your expenses versus, your income versus your expenses. Well, in assisted living, 20% is a good number. And so with 20%, it can erode really quickly. And so payroll is big. If you can't control your payroll,
huge.
Look, we've got almost 400 units, and we've got about 300 employees.
Wow,
that's a lot of payroll, right?
Sure.
And it's so you have to be able to control the payroll. So I think that's the biggest thing: is can you control the operation? You're running a business. Real estate is a side of the business. So we've got real estate. That's our buildings, but we've got a business that we're operating. I think that's the biggest thing that people have to understand. It's just not that multifamily. Multifamily is a business as well. I think a lot of people don't think of it that way either. But multifamily is just a different business with a lot less people. 100 units of multifamily, or let's call it 400. 400 units of multifamily. I've got 8-ish employees, maybe 9 or 10, but not 300.
They're doing a lot more, right? I mean, like your employees, to me, it's like multifamily and comparing assisted living. There's actually a very similar comparison. It's just that the needs of the resident are much more for assisted living. My company owns a hotel. The needs of the resident are different in a hotel than the needs of the resident in a standard multifamily asset. And it's different than it is for assisted living, right? So it's about like having the team members that are there to meet the residents' needs. And it's just different. And the charges that you charge per night, per month, per year, per whatever is different because it has to go back to the needs list that needs to, like, it's what needs need to get met with you staying in this roof. Yes, you want to stay safe. You want to stay dry and have your toilets unplugged and whatnot. But above that, what else do you need? Well, for assisted living, it's much more, right? And that's why you need more staff. And that's why you got to charge more.
Yeah. Matt, what's going to cause, like, to answer that original question, what's going to cause you to be profitable? What's going to cause you not to be profitable? I think it's the same thing. It's controlling and not controlling. It's a bad word to say, but leadership, leading your team.
Managing. Yeah.
So that's it.
Leading the team. So it's like, if it sounds like it requires a lot of finger on the pulse with where each dollar and cent is going, coming in and out of the property and everything like that. If you're able to do that and able to manage efficiently, assisted living can be a good arrangement. It's probably very hard to push your revenue in assisted living because a lot of it's coming through insurance services who are used to paying X amount of dollars per room or per resident or whatever whatever you get in. So it doesn't sound like revenue adjusts much in the assisted living world. Am I correct in that world?
Yeah, look, revenue. I mean, yeah, it's not a big value add industry, right? You're not going to go in. Not saying you can't. You could go in. You could do some value add certainly to it, but I think you're going to have a tough time like pushing rents massively for the most part.
Because if you're taking insurance, the insurance company's only going. They've got their equation. They're only going to pay you, but so much. The end. Right.
Yep. You got
it. So it sounds like the game, again, like this is actually a good way to bring it home. Comparing your deal in Minnesota that you did, that's a big revenue play. And I get you're not going to make your money just on pushing revenue, but you made your money by doing, bougie old pickleball courts and meat smoking stations and that kind of thing. That is a revenue play. Right. The assisted living game, it seems to me to be an expense play that by, what the revenue is going to be walking in the door because what Blue Cross and Blue Shield and all the other insurance carriers are going to pay within a percentage. Right. So you make your money through expense management versus the other side in creating something that's phenomenal, that's like nothing else in the market that people are going to pay you a premium for.
Yep. Got it.
I love it. You got to be good at both, best ever listeners. Got to be good at both. Expense management's that's like the unsung hero of real estate investing in some ways. People always want to push income, but either way, I mean, your bottom line grows by decreasing your expenses, and keeping them under wraps, and also by pushing revenue. Both are important. So great. All of a sudden, there just went an hour, Todd. Gone. Hour of your day gone. I hope it was of value sitting here chatting with your buddy Matt. For those that want to chat with you more, that want to hear more about your company, what you're up to, talk assisted living shop, you want to come live in your building, they want to come play pickleball with you and smoke some meat and stuff like that, all the things. How do people get a hold of you?
Yeah, thanks for that question. So email or connect with me on social media. So our website is enduruscapital.com, ENDURUS capital.com. My email is just my first name, Todd, TODD, and then it's at enduruscapital.com. Connect with me on LinkedIn is probably the best thing. Shoot me a message, say you heard me on the Best Ever. Love to connect with you there. Hopefully I'll be at the Best Ever conference again this year. So if you're there, come find me as well. Or I guess next year, whatever, 2026, but the next one coming up.
Yo, you ski. You'll be there. It's right after.
Yeah, right. It's kind of
right after President's Day weekend. So we made it pretty much a ski week for everyone. So come hang out with me and Todd at Best Ever in Salt Lake City. So.
It's a great excuse to go 100%. Skiing. So if you love skiing, I'm bringing the
whole Faircloth clan, man. The whole group's going to be there. So.
Love it.
Well, hey, I look forward to hanging out with you there and definitely talking to you sooner. Guys, check out Todd Dexheimer. Todd, phenomenal conversation. Thank you for bringing your experience and your insights here to the Best Ever listeners on the Best Ever CRE show today.
Thanks for having me on, Matt. Appreciate it.
Guys, great conversation with Todd Dexheimer. I hope you guys enjoyed it as well. I really liked his philosophy on markets. I like that we talked about cash flow because guess what? That's something that is becoming more and more in fashion. You got to do deals that have cash flow. Appreciation was great. It's a nice little icing on the top of the cake, but cash flow seems to be king these days. So maybe that's something you guys should be seeking as well. I love his insights on the assisted living space, the good and the bad there, and what it takes to make an assisted living deal work. Hope you guys enjoyed it as well. If you guys enjoyed this episode, you know what I'm going to tell you to do? You know it. Go ahead and do it. Subscribe to this podcast so that it shows up in your feed, so that it's there, looking at you, staring at you, asking you to listen to the next episode so that you can learn all about the real estate investing shop that we talk here on the Best Ever CRE show from me and all the other hosts, which, by the way, will be at Best Ever Con, so make sure you come see us there too. Until Best Ever Con, keep listening to these episodes by subscribing to this show and liking it and maybe even sharing it with a friend. Guys, I appreciate you, as always, enjoying our episodes here at Best Ever. And until I see you on the next episode, have a best ever day.